Hey there, boys and girls. Welcome to episode number 3 on my channel talking about financial health. I'm Lucas Hudson, and no, just kidding. Thanks for tuning in. Please like and subscribe, share the video. Really appreciate that. Like I said, my goal here is to educate people on all things finance and just want to help people get better regardless. So just please share. So today the topic is financial needs analysis. What is a financial needs analysis? Which I touched on very briefly at the end of last week's video. If you haven't seen last week's video, please check it out. There's some really good things on there, things that you can do to help with your budget, put money back in your pocket, that sort of thing. Before we hop in, one bit of business I would like to address. I'm trying to stop saying or so much. Watching last week's video, I realized that's about 80% of my vocabulary is that word. So help keep me honest on that. I thought about suggesting a drinking game, but I think many people would end up with alcohol poisoning. So let's just skip right over that idea. Let's hop right in. Question number 1, what is a financial needs analysis? A financial needs analysis is an analysis of your financial needs. Thanks for tuning in. I'm Lucas Hudson. You have a great week. But really, let's talk about it. This is going to be a high-level overview of what a financial needs analysis, or FNA, is. There's a lot more to it than what I'm going to go into. I mainly want to introduce the concept today. But a financial needs analysis should be your next step to financial health after you've established a budget. The budget is key here because it will help us paint a picture and answer a lot of the questions we'll need to do the FNA. I've summarized it down to 4 main points that make up a financial needs analysis. The first point being, in my opinion, the most important, life insurance, which is a misleading name. I like to refer to it as income insurance because it doesn't insure a life. It insures the income that life is able to produce. So it's really income insurance is what I like to refer to it as. By the way, fun fact, it used to be called death insurance and it did not sell well because that is a failure in marketing. Glad they renamed it. If you were to ask me what the single most important decision that you can make financially for your family, my answer would be, without question or hesitation, make sure you have life insurance and make sure you have enough life insurance. That's another big problem. A lot of people are underinsured and it can cause lots of problems. And I'll share an example. But that's the first thing that I analyze when I'm meeting with a new client. It's definitely not a fun conversation. It often can be an uncomfortable conversation talking about mortality and what do you do in the event of a premature death. But it's a very, very, very important conversation, especially for people with families and those who depend on your income to live. Vitally important. Can't stress that enough. Because the fact is, none of us know when we're gonna clock out. It can happen at any time, regardless of health or age or anything else. Not one of us is guaranteed tomorrow, so you need to be prepared for that. Let's talk about an example. Let's say there's a couple, we'll call them Mary and John. This couple just had a baby girl, and John is going to stay home with the baby. Mary goes back to work, and she earns $40,000 a year, and that's the entire household income. So the whole house lives on $40,000 a year. Well, one day Mary's driving home from work, and someone runs her off the road, and she crashes her car, and she dies, which is tragic. In an instant, this family has been absolutely shattered. They just lost a loved one and have to deal with everything that comes with a loss like that. Now, there is nothing anyone can do to mitigate that kind of pain, but there is a way to lessen the financial burden, because let me promise you, that is a huge part and a huge issue that will have to be dealt with. Because if Mary did not have any life insurance, not only did John just lose his wife, but he also lost her income. So he is forced to go provide for his family. So he lost an opportunity to spend those formative years with his new daughter. And he may have to even sell the house or move in with family. Something drastic is going to have to change in their lives financially so he can make ends meet. He doesn't even have time to properly grieve for his wife because he has to start providing for his family immediately. What if Mary did have life insurance? What if she had $100,000 in life insurance and that gets paid out to John at the time of her death? Well, we know John is used to her bringing home $40,000 a year. So if he gets a check for $100,000, that may last him 3 years if he stretches it. But in all honesty, it will probably last him less because he probably hasn't managed that kind of money before and may not be very responsible with it. And he probably is going to have to use a chunk of that money to pay for Mary's final expenses or funeral expenses, which that's $10,000 usually at the minimum. At this point, I thought it would be a good time to have a sort of palate cleanser because that's kind of heavy stuff to talk about. And I know we're talking about a theoretical example, but this is stuff that people actually do experience, and this could be a triggering conversation for people to have. So I wanted to have a palate cleanser. What do you get when you cross a joke with a rhetorical question? Okay, let's say that when John and Mary decided to get life insurance, they met with someone who did a FNA to determine what their needs were in the event of a premature death. Maybe it was someone handsome with a sweet beard and a receding hairline. And this handsome gentleman recommends having at least 10 times Mary's annual income. Because in the event that something did happen to her, John would have 10 years of her income to live off of. So he can stay home longer, maybe they had more children or something. Although, just like in the other scenario, maybe John isn't used to having $400,000 at once. Most people aren't, so maybe he doesn't have the discipline to manage that kind of money. So another option would be to take that $400,000 and invest it and let that money grow. While that money is growing, we can pull off 10% a year. And so that would replace that $40,000 income that John is used to having to run the household and take care of groceries and stuff for the kids, clothing, everything like that. And that money is still growing at the same time. There are other ways of calculating what a person's life insurance needs are, but this is a quick and easy example to kind of show you how I might analyze somebody's needs. Again, sorry if that was heavy, but I honestly believe it's extremely important. Most of us know someone who has died prematurely, I think, and many have seen a fallout financially due to a death. Like I said, there's nothing anyone can do to erase that kind of pain. But if I can help remove the financial strain that comes with a horrible, horrible event such as that, if I can do that for one family, I'll do whatever it takes and everything else will be worth it. And I mean that. I truly, truly do. Moving on. Emergency funds. This one is simpler, but it's also very important. And I've touched on it in last week's video and maybe the first video, I can't remember. But if a client doesn't have an emergency fund, this is the next step after we make sure they're properly protected. Just like life insurance and everything else we're going to cover, this will look differently for everything. Everything that I'm talking about here is custom. It's not one size fits all. We have to customize it for each person. I first want them to establish a base or a first level emergency fund, which usually I suggest to be about $1,000, which again, I talked about in my last video. Once they have that, we'll start working on the next step, step 3, but we still have some work to do, and we're not done with that emergency fund. I typically suggest that a goal for an emergency fund is anywhere between 3 to 6 months of your monthly living expenses. If you get laid off, get sick or hurt, can't work for some reason, you have something to fall back on so you don't have to turn to credit cards and go into debt or start making drastic decisions that are alter your life for a much longer time because of a setback. The other thing with emergency fund is that it's important where you have an emergency fund, where you put that money. I advise my clients to put their emergency fund in a money market account or some account that's a little more difficult to access. You shouldn't have a debit card attached to this account where you can just swipe and buy something with it. I like money markets because you have to request the money and it takes a few days. Why? Great question, internet. Because let's say you're out one day and you find your dream couch and it's on sale for $2,000. So you decide to borrow that money from your emergency fund. That's not an emergency. Stop being ridiculous. Step number 3, debt. This is something almost everybody can relate to. Almost everybody I speak with can relate to this personally. The average credit card debt a person has is $8,398. On average, Americans take out, honest to God, I couldn't believe this. On average, Americans take out $51 billion with a B dollars every year in auto loans. That's insane. The average auto loan for a used car is $20,000. And for a new car, it's $32,000. And interest rates on average, just averaging, depending on what your credit score is, can be anywhere from 5.66%, okay, to 21.5% interest. That means you're paying like a quarter extra towards this car, basically. As of 2016, the average student loan debt was $37,000, which I'd be willing to bet since 2016 it's gone up. And these are all averages, which means there's some below, but there's some above this limit. I actually, from another source I saw where it said the average credit card debt household was $16,000, that's really wild to me. But debt is a huge problem and a problem that I want to help with. Again, I like to help with problems. So we're going to analyze your debt, find out what you owe, how much interest you're paying. That's important. How long you're going to be paying that debt off, if it's like in installments, a car loan, like 5-6 years, whatever. And then next, I'm going to create a plan to show you how to pay that debt off faster and avoid a lot of money paid towards interest. Because the quicker you pay something off, the less you're going to be paying in interest. And oftentimes, I can save people that time and money on their debt without even increasing their monthly budget. I can, a lot of times, work within their existing budget. I always encourage people to pay more to their debt if their budget allows it, if it's not going to, create a stress on their finances. But you don't have to have an extra $200 or $300 a month to get out of debt faster. A lot of times you can do it with what you're already paying, and I can show you exactly what that looks like. Our final step is retirement. When we talk about retirement, I'll find out what you want your retirement to look like. When do you want to retire? How much money do you want to have every year when you retire? Are there other dreams that you would like to achieve when you retire, like a dream trip to Australia or something? Once I know what you want your retirement to look like, I calculate what's called your financial independence number, or FIN for short. Your FIN is the amount of money you need to stop working one day and live the life you want to live. I'll be able to tell you what that number is based on the amount of money and the amount of time you'll be working, and I'll adjust that for inflation, which is very important. And most importantly, I'll tell you how much money you'll need to put aside to hit that number every month so you can retire at, or sometimes even before, your goal retirement age. The number one reaction I get when I tell someone what their fin is, they can't believe how big that number is. The number is almost always millions of dollars, at least $1 million, but oftentimes multiple. People often don't realize how much it really takes to retire well, to where you can actually enjoy it. And too many people are just relying on Social Security and pensions, but that's often not enough. Even if you're saving for retirement with a 401k or other retirement fund, you need to find out what your financial independence number is to know if you're on target. Honestly, there's a good chance you're not. And so just having a conversation, I can help you with that. This is vitally, I use the word vitally a lot, but it's vitally important to everybody to know what that financial independence number. If you are in your 20s, it is not too early to start thinking about your retirement. It's not at all. If you're in your 20s and you start now, you have the greatest gift, which is time, to get this done. You don't want to be playing catch up when you're 50, 55 years old. Now, if you are 50, 55 years old and you need to play catch up, I can still help with that, but it's going to be harder. So if you have the gift of time, please do not waste it. Even if you're putting aside $25, $50 a month, if you can do that, do it. Do it. So that's a financial needs analysis in a nutshell. It is such a valuable tool and important if you want to get out of this cycle of having financial struggles, living paycheck to paycheck, collecting debt, never being able to buy a home, all these things. It's this cycle, perpetual. Like I said in my video last week, I don't charge my clients to do this. What I just showed you, I don't charge a fee for doing that. I'll create this completely customizable financial game plan for you, and I'll update it. As things happen in life, marriages, kids are born, you get a raise, sell a house, divorce, whatever, inherit money, we need to go back and look at this again, and I will continually update that. Major life events have a huge effect on our financial health, so it's important to review and update that whenever one of those events comes along. Okay, next week I'm gonna tell you about a really great free's always good, financial health seminar going on next month. I'll give you all the information you need to access it. I can't stress enough how valuable it will be. You can learn a lot from it and get ahead in 2020. An exciting announcement, I recently connected with an old friend that I hadn't seen in years that I used to work at Starbucks with. Loved working there. But I found out he is now trained as a credit specialist. I'm not sure if that's what the official certification is called, but he's going to have that certification. But he will be coming on the show from time to time to give some information to help you better improve your credit, which you have to have good credit in this day and age. And he has agreed even to give away for free, just to our viewers, a few free personal consultations. So we'll be giving those away whenever he comes on in a couple weeks. So that's really, really cool. Really excited to have him, bring him on, have part of the team. As always, I greatly appreciate you tuning in, and I hope this is making a difference, even if it's just for one guy. It's just for you and me, buddy. We're gonna conquer the... Please like the video and subscribe to the channel and share everything. If you would like to talk to me about your finances, do this financial needs analysis, my email will be at the end of the video. Just shoot me a message. I'd be happy to talk. Thanks again for making time for your financial health. We'll talk next week.